I'm Greg Hunter. Welcome to USAWatchdog.com. With us, the president and CEO of Sprott US. I'm talking about Rick Rule. Been a long time since we had you on, Rick Rule. I've been an embarrassment of guest, and you are a good one. Thanks for coming back on.
Always a pleasure. Thank you.
I wanted to just get in here really briefly, and one of the things that a lot of people have brought up is about how a lot of predictions about the gold market was going to go up, and lo and behold, we found out last year how utterly we knew it was manipulated, but even I was surprised that it was manipulated with primary dealers of treasuries in multiple countries around the world is suppressing the prices of both gold and silver. Thank you, Deutsche Bank, for letting us know all of that. And but it's still not going to stop the inevitable. Back in September of 2015, it's just pay me now is what you said, or pay me later. You have to prepare for the inevitable. Will you talk about that a little bit, preparing for the inevitable?
Sure, Greg, and I think that's precisely the point. The recent evidence has shown that most markets are manipulated from time to time. Certainly the LIBOR market manipulation has come out. Interest rate manipulations in the U.S. have come out. Equity market manipulations have come out. So this shouldn't come as a real surprise to anybody. But as you point out today, and you've pointed out on so many of your other shows, in truth, markets always triumph over manipulators. Conspiracies are always short-term exercises, not long-term exercises. And the point of my exercise with regards to pay me now, pay me later, are simply that gold and silver, precious metals, if you will, have acted almost from time immemorial as at once mediums of exchange and stores of value, which means in times of turmoil, they are superior investment instruments to things like fiat currencies and longer-term government issues. And my particular point was that either the price rises moderately in the near term or it rises very dramatically in the long term, because the manipulation can't overwhelm forces as large as a real market.
What do you think about the price action here recently in gold and silver? I mean, silver's had a nice little pop. Gold's had a nice little pop. Bitcoin, Cliff High watches Bitcoin. He's with halfpasthuman.com. He says it's less manipulated, way less manipulated than gold and silver and Forex and everything else. And it's been catching a bid because people are fleeing fiat currencies, especially in China. What do you think about people fleeing fiat currencies? How long can they cap this as people are getting very, very freaked out about global debt, which has exploded, and the bonds, and then there are currencies that go along with it? Why do you think gold and silver are going up, and is it for real this time?
Well, it wouldn't surprise me if the gold and silver prices stayed muted. I don't want to really say suppressed, but merely muted for 6, 9, even 12 months, simply because there is a lot of faith in the U.S. dollar as expressed by the U.S. 10-year Treasury. Greg, I personally feel that to be misplaced trust, but I understand it. Our mutual friend, Doug Casey, has described the U.S. dollar as, quote, the prettiest mare at the slaughterhouse. And what he means by that is that the U.S. dollar and U.S. 10-year Treasuries, while intuitively weak as a consequence of, say, $20 trillion in U.S. on-balance sheet liabilities, are stronger than competing fiat instruments like the yen, which is being deliberately weakened, or the euro, which is subject to peripheral forces. So it wouldn't surprise me to see relative dollar strength and relative strength in the U.S. 10-year Treasury, which would serve to keep the natural up move in gold constrained for 6 to 12 months. Two comments on that, however. That ignores black swans. It ignores any set of circumstances in the next 12 months, and either you or I could name 20 potential trouble sources in the next 12 months that would cause the faith that the markets have in the U.S. 10-year Treasury and the U.S. dollar to weaken substantially, which in any case would be very, very good for the gold quote. One final point before we move on, because it's instructive as to the power of markets. You will note that the Fed moved their rate up 25 basis points, and the market moved the interest rate on the U.S. 10-year Treasury up a full percent, 100 basis points. The markets are always, always more important and more powerful over time than the manipulators.
Do you think that the 10-year Treasury is at what 2.37, 2.4, whatever around in the 2.4 range? You're saying that you might see the Treasury go down as people flood into the Treasury market to escape other turmoil around the globe, it being the prettiest mare in the slaughterhouse. Is that what you're saying?
Well, certainly given that there's continuing faith in U.S. government securities and the U.S. dollar relative to its alternative, the U.S. economy paying 2.4 over 10 years is much more attractive than the European economy paying 150 basis points less with problems on the periphery. Until something happens to really fundamentally damage faith in the U.S. 10-year Treasury, I think it is relatively attractive and could hold up to the near-term detriment in gold. I remember two prior times in my career, the latter half of 1975 and the beginning of 2002, where both the US dollar and gold rose simultaneously as a consequence of sort of coordinated global currency weakness. And in both cases, ultimately, the dollar rolled over somewhat and gold did extremely well in the aftermath. And it wouldn't surprise me in this case to have passed as prologue if gold and the US dollar did well through 2017, and then the US Treasury and gold had some weakness, pardon me, the US Treasury and the US dollar had some weakness, and gold did very well, as it did in 1976, and as you'll recall, in the latter half of 2002 and all of 2003.
Do you think people should be buyers, just dollar cost averaging buyers? Gregory Manarino, one of my regulars on the thing, and also a personal friend of mine, he just says, listen, here's what's going to happen with gold and silver. They're so crazy, the markets are so crazy that when you get shortages, and they're coming, that's when you're going to see the prices move. What do you think about that idea? When you see are shortages coming, and do you think that's a good premise?
I don't know that we're going to see shortages through 2017. I'll tell you this, Greg, because so much of my own professional life and my fortune is tied up in Sprott and natural resource equities. There's an argument that I personally shouldn't have to own gold at all, but I'm a consistent buyer. I buy gold not because I think or hope the price is going to go up. I buy it as a consequence of insurance against the conventional financial system and financial services industry. Ironically, I buy gold on a sort of a quarterly basis, dollar cost averaging just exactly as you suggest, in the hope that the gold price doesn't go up. Because if you're buying gold for insurance purposes, which is the reason why I'm buying it, you sort of hope that the gold price doesn't go up. Think about insurance, life insurance. If you get paid, somebody died. Auto insurance, you had a wreck. Home insurance, your house burned down. That's the same reason I buy gold. I buy it as a consequence of the potential, which I believe is high, for disruption in conventional financial systems and financial services industries.
Do you think that a bank could go under, or European banks, Italian banks, they want to have a referendum on the European Union? Marine Le Pen, she's gaining traction. Although the mainstream press over there says, "Oh no, that's not very popular." Of course, it is. In Italian, the big move, they have 2/3 of their legislature that want to vote on a referendum, and they want to leave. They're tired of the whole Euro thing. Could the European Union bring down the whole world? And do you think that's a possibility?
I do think it's a possibility, although probably not a probability. And I don't think it's necessary for an event that catastrophic to take place to move the gold price. You'll remember the decade of the 1970s, Greg, although you're not as old as I. The shocks to the financial system in the 1970s were severe but survivable. And the gold price went from $35 to $850. Back to your original question as to the solvencies of the banks. As you can see by my photo, I'm not a young guy. I was a finance major. And the way I learned accounting, it's not like the banks are going to go broke. It's that the banks are broke. In terms of the accounting principles that would have been applied to the banks in the 1960s and 1970s, it isn't a question of ongoing bank solvency. It's a question of real bank solvency and how long people believe in the system and whether or not the system stays stable enough that artificially low interest rates and artificially broad lending spreads service to reliquefy the banks, a process, by the way, which the Japanese tried and eventually over 15 years succeeded at.
If the banks do, if we do have a daisy chain of bank defaults, how will that kill the confidence in the system pretty quickly?
I would suggest it would. It would certainly kill my confidence in the system, Greg. Not that my confidence is overly strong, as we said, but yes, certainly, if the major players in the financial system had to face a liquidity squeeze, even of the order of magnitude that they faced in 2008, I suspect the fiscal tools that are available to them are constrained enough now, meaning that they have been used to such excess in the past that they would be unsuccessful in containing a broader liquidity-based contagion.
In other words, we'd see defaults and we'd see bankruptcies. Just flat, that they would have to let things go.
I don't think they would have any choice but to let them go. My own suspicion is that we are going to skate through this situation without the catastrophic situation that you describe. I could be right, I could be wrong. But I think in terms of the gold price, it doesn't matter. If the system is tested, not wrecked, it will be extraordinary for the gold price. Getting away from the issue of bank solvency, Greg, what so many people forget when they focus on the narrative is the simple arithmetic. You and I and our fellow Americans owe each other and other people $20 trillion.
2,000 billion.
Trillion in recourse liabilities. If you write that down, that's 20 with 12 zeros. I think people don't focus on it because it's an almost incomprehensible number. It's an astonishing number. Beyond that, we owe each other in the context of promises to pay off-balance sheet liabilities in excess of $100 trillion. And that number doesn't come from a cranky old guy at Sprott named Rick Rule. It comes from the Congressional Budget Office. How on earth are we going to resolve $120 trillion in on-balance sheet and off-balance sheet liabilities before we consider state and local debt and underfunded pensions? I have no idea about this, but my suspicion is that we get out of it via one of two kinds of default. A formal default, where we say to the beneficiaries of off-balance sheet liabilities, people like 64-year-old Rick Rule, yes, we made you promises with regards to Social Security and Medicare and Medicaid, but we lied. Where we say to holders of U.S. debt, yes, we promised with regards to our full faith and credit to pay, but we lied. Those are official defaults. In other words, that requires telling the truth. I think that's unlikely. I think we'll have a series of unofficial defaults where we devalue the net present value of the obligations, which is a different way of saying we devalue the specie or the currency gradually, like we did in the 1970s, which I think would have the same sort of impact on gold and silver prices.
Donald Trump, speaking of which, early on in his campaign, and I ask you about this because that just perked me up when he was talking about, and I don't have a direct quote, an exact quote, but he was talking about, we're never going to be able to pay this debt. We need to reorganize their debt was his theme, was the idea. We need to reorganize this debt, and boom, ixnay on that. He quit talking about that. Donald Trump is you talking about his bankruptcies, which I don't know why he didn't come out and said, yeah, I had 4 bankruptcies. I didn't get bailed out like Goldman Sachs. I didn't get bailed out like General Electric. I didn't get bailed out like Warren Buffett. I took a pie in the face. I don't know why he doesn't say that. But Donald Trump, as presidency, he's not going to give away Wyoming and Missouri to the Chinese to pay that debt. That ain't going to happen. So with Donald Trump, what do you foresee happening? Things are going to change and things are going to move. Are we going to get inflation with Donald Trump? Are we going to get defaults? Are we going to get wild currency speculation? A trade war? What do you think is going to happen with Donald Trump as the president? Who I like, incidentally, but he's going to do some things.
Well, I'm not going to pass any judgment on Donald Trump. I think you know my political views well enough to know that I think you can tell that any politician is lying when his or her lips are moving. And I suspect that Mr. Trump's ability, at any rate, to undo the damage done by the deep state, irrespective of his determination, is low. I don't see any way that Mr. Trump, particularly if he proposes to spend $1.5 trillion on infrastructure, can succeed in reducing fiscal 2017 deficits below $2 trillion. That's trillion with a T. And at some point in time, our ability, I don't mean Trump's ability, I mean all of our abilities as US taxpayers and US citizens to continue to live beyond our means and shovel the responsibility for current obligations onto our children and grandchildren is going to end. Our ability to arbitrage our lifestyle onto the future will eventually be called. And when it's called, I suspect it will be very good for the precious metals prices, precisely as it was good for precious metals prices in the 1970s when we couldn't decide between guns and butter and chose both.
Do you think Donald Trump will be successful in bringing back some jobs? It looks like he's being successful right now. He's got commitments from Ford. He's got commitments from Alibaba. He's got commitments from Alibaba, I think it is. He's got commitments from a lot of folks. He's got big car companies lying to him about where they make their cars because they're freaking out. Tell me about what you think about the trade angle of Donald Trump.
I need to admit, Greg, that I'm a credit analyst, not an economist or a political scientist. My suspicion is that Trump's jawboning and his ability to initiate trade disputes will not be helpful. My suspicion is that if he is successful there, he will limit global economic growth and it will backfire. If Mr. Trump, however, is actually able to roll back restrictive regulation in the United States, we are our own greatest enemy. If he can make the United States great again in the sense that he keeps us from competing against ourselves, then we will see a spectacular economic boom in this country. Trump misstates the enemy. The enemy is not Mexico. The enemy is not the Chinese. The truth is that a young auto worker, a 22-year-old auto worker in India making $2.50 an hour, is always going to be more efficient than an older U.S. auto worker, both in terms of what he's willing to work for and also his ability to adapt to technology and hence employ capital. The enemy is not the Chinese, it's not the Indians, it's not the Mexicans, it's ourselves. If Trump is successful just in rolling back the nanny state, just in reducing regulation, I'm not saying getting rid of regulation, just getting rid of idiotic legislation. If Mr. Trump is willing to make the United States a better place to invest, that's all he needs to do. I don't know that the deep state will allow him to do it, but I pray for him in that regard.
The work hard. I mean, you have to be looking at that when you're investing large amounts of money, which you guys do over there at Sprott. And does anything in the war theater, particularly in the Middle East, and the Iran deal with the U.S. firing warning shots in the Straits of Hormuz, and the non-deal deal, I call it because nothing was signed. In Iran, also the Middle East, ISIS, Russia, the whole deal over there, the terrorism component. What do you see in terms of violence, terror, and destructive nature of war, or skirmishes, whatever severe we have in the violent sphere? What are you seeing for 2017?
Those are always black swans, and of course, one always hopes that cooler heads prevail. Certainly, hostilities not so much involving the U.S., but rather hostilities in the Middle East between Sunni and Shia Islam threaten many people in many ways. I'm frankly, personally less concerned about ISIS because I believe that the atrocities that ISIS has fomented have given cause to a massive revulsion against ISIS in the broader Sunni community. And I suspect we will come to a point in time where the Arabs begin to take care of their own problems since they can't convince us to take care of them for them. My broader concern is conflicts between the leadership in Sunni and Shia Islam. You point to the Straits of Hormuz, which at its narrowest point, as I recall, is about 50 kilometers wide, through which in excess of 50% of the world's export volumes of crude oil move. If there was a uglier confrontation between Sunni Islam on the Arab Peninsula and Shia Islam in Iran, that could have immediate and devastating impacts on the flow of oil to the free world. And I suspect that that would have a dramatic impact on energy prices, on the global economy, and on precious metals prices. It's unthinkable in many reasons, but everybody needs to concern themselves with it. I don't think it is a probability, but I certainly think it's a possibility worth considering.
The new wrinkle is the warning shots at the Straits of Hormuz. So, woo, I just, to me, that's just a new level of, now they're shooting. Now they're shooting at them.
I hope that's merely a form of advanced communication, Greg, but again, you're way above my pay grade.
I know. Yeah, you're very kind. I'm not way above your pay grade at all. But but you're not. So you think the bigger idea here is the probability or possibility of really more violence between the Shia and the Sunni, less than the U.S. and Russia.
That's correct. That's correct. I certainly hope that's the case. As long as we're speaking on Trump and politics, although I'm not a fan of Trump and certainly was not a fan of Clinton, they didn't give me a box that said none of the above. I have to say that I find the appointment of Rex Tillerson to Secretary of State to be a positive development. I don't know Tillerson well, but I've met him. I do recall that he is rumored to have told George Bush Jr. that if his adventures in the Middle East were about oil, that oil was cheaper to buy than to steal. And certainly having somebody that has a market rather than a political perspective, somebody who is pragmatic with regards to everybody's control over their own system, I think would be a wonderful movement towards world peace. And world peace, of course, supersedes anybody's personal economic concerns.
Yeah, I like Tillerson too. A little oddball kind of pick, but he's a global guy. I don't necessarily like the Goldman bankers that I mean, Mnuchin. I mean, you could pick somebody else other than somebody that had charges of types of all kinds of malfeasance with the mortgage market and the the subprime meltdown after it happened. So whatever. I digress. All right, and one last thing: prediction for 2017. If I can put you on the spot, what do you think your predictions for 2017? Just in gold and silver, because you are Sprott Asset Management and President and CEO. Where do you think it'll be? This time in 2018.
It wouldn't surprise me to see gold in the $1,400 to $1,500 range. I think gold and silver will surprise to the upside. And I'm delighted and I thank you for not asking me to make broader commodity price forecasts, because I have to say my outlook for those is decidedly mixed. But my own suspicion is that gradually around the world and in the United States, we will become less focused on the narrative around gold and the US dollar, and will become more focused on how we maintain purchasing power strength and a medium of exchange for a society that's $120 trillion upside down.
Very good. Rick Rule, you were worth the wait. I'm sorry it took me a couple of years to get you back on, but we'll make it shorter next time.
Hopefully we can revisit.
Yes, sir. Rick Rule, President and CEO of Sprott USA, Sprott Asset Management, the lovely people of Sprott. Thank you so much for coming on. It's for you YouTubers out there. I'll put all the links. They also have a lot of free information, material, articles from multiple people at Sprott that you guys can look at for free. So thank you very much, Rick Rule of Sprott Asset Management. Thank you so much for joining us today on USAWatchdog.com.
Pleasure, Greg. Thank you.